Welcome, guys. Welcome, guys. It's your boy Jay. This is the Digital Revolution podcast. It's your boy Jay. You already know what it is. Listen, guys, I have not been on here in a while. I have had to take a break. I've been suffering from like some type of exhaustion. I was having health issues. I was having severe migraines, and just exhausted, really, just exhausted with everything. And I hope you guys bear with me. And thank you guys for the ones that have subscribed, that have liked and subscribed and added their own comment. As you know, that we cover, news, views, political issues, even though I don't really consider myself any kind of political anything. I am a licensed esthetician and licensed realtor, and that is my experience. I'm going to try to make this podcast fairly straightforward and fairly simple. Um, but whew, there's been so many crazy things that's been going on lately. Let's get right to it though. Let's get right to stocks and bonds and equities. And let's see here. Okay, again, it's your boy Jay. This is Digital Revolution Podcast. If you like the information that I'm sharing in this, please like and subscribe. Guys, we're going to be going over equities. What is going on in the stock market, dude? Oh, fuck, yo, the stock market. Okay, let's pull back on that stock market. Okay, right now we're looking at the S&P 500, and we're going to pull back on that. Let's pull back on the S&P 500 on a monthly chart. Now, guys, the monthly chart is like what a 401k, a long-term holder of this stock would be looking at. And we're looking at this right now for the long term. It's a hell fucking no. It's a hell no. Right now we have a Fibonacci on it. Looks like it's hitting that. Well, no, it hasn't hit it quite yet. The golden ratio right here, but you know what? Let's take the Fibonacci's off there and let's just look at the chart straight up. Okay, so listen, guys, if you go back to what I was saying last time, it kind of came true. What I said in terms of the price of gold, and we're going to get to the price of gold in a minute. But what I said, it is happening. And again, this is not financial advice. Do not take this advice at all. I mean, to each his own, but we're just, kind of going over equities right now. So listen, long term, what the Ichimoku trading system is saying is that we're in a consolidation period. As you see here, we have here the cloud here, single span A is pointing down, which is not good. And we have single span B pointing flat. If we kind of take off the price action, we have the we have the moving averages pointing straight and down, and then we have this lagging indicator touching the price here, which tells us that we are in a consolidating market. Now, if you don't know how to trade, if you don't know how to maneuver in a consolidating market, then get the fuck out. Get out, guys. I have a potty mouth, so it is what it is. I'm just going into these equities, but listen, yeah, again, this is not financial advice. Don't take this advice as, like the holy grail or whatever, because by no means am I a financial advisor or whatever. I'm just giving you my perspective out there. And as you guys know that, all of this is just bullshit. Everything that you see in the stock market there is some form of a derivative, a derivation in there. These are contracts upon contracts being traded. These are not real price. These prices are inflated as well. Everything you see in these stock markets also is a form of credit and debt. But I digress. So here on the weekly chart, we also have a consolidation. However, with the S&P 500, if we look here at the top, that was the top, and we hit that top sometime in January 22nd. But here at that top, at about $4,816. And since then, investors have lost 27%. So we're looking at about 20, almost 30% that long-term investors have lost. Now, they had gained it. They had gained it. They have had gains in the S&P 500 of up to 19%. However, they had lost it. So, you would have to, so you lost about 30% of it. And in order for you to break even, you would have to come all the way back up here to this 4,816 level and, then some in order to break even. So investors are losing their money. This is a big scam. This is all a scam. Again, what I want to convey here in this message here is that what do I want to convey? This is what I want to convey, that the stock market is a fucking scam, okay? And people are about to, with the talks of the debt ceiling, people are about to lose a lot of money in the stock market, particularly if they're long term. This market, what I'm want to indicate to you guys here is that this market is for short-term trading. This is get your money, make as much money as you can in the markets, and get the fuck out. And guess what? Buy hard assets, particularly buy gold and silver. And that is essentially what the banks are doing. I believe, as Lynette Zhang said, from ITM Trading, that in Q4 of last year, the banks have bought more gold and silver than they ever, particularly more gold than they have ever bought in the history of central banks. Particularly since the 1960s, I believe. Don't quote me on that, but the banks, the central banks are buying up gold and silver left and right. Guys, follow me. Please like and subscribe if you like the information that I am kicking to you today. It's your boy Jay. This is the Digital Revolution Podcast. The revolution will not be televised. And guess what, guys? We are going over equities. Again, the general consensus here with the equities is that make as much money as you can. I believe that the JP Morgans and the hedge funds and the BlackRocks, they're going to try to extract as much liquidity out of the system as they can, and then roll that liquidity over into hard assets, because long term there's going to be issues with the dollars, guys, issues with our money, issues with the money itself. Let's see here. The money is like this. It's nothing, right? Right now, if you were to weigh, let's just say that this was money, right? If you were to weigh money in terms of gold, then the cash or the fiat has lost 98% of its purchasing power. So if we know that, we understand that long term, there's going to be issues with the dollar, and then you have other countries de-dollarizing, getting out of dollars. Why the fuck would we want to hold dollars? Guys, this what these banks is doing, they are consolidating all the power into just a few banks, to get everybody just into a few banks, and they're going to buy up everything. Essentially, the government will nationalize all the banks. They're talking about the debt, and of course, I'm digressing, but they're talking about the debt ceiling. And guys, I hope you can see this here. Here we have here Rutgers. I don't know if you guys can see this. If it's going in there, maybe not. Looks like it won't let me do it. But anyway, so we have it talks of, hitting the debt ceiling, guys. The reason why the government cannot pay its bills anymore, right? They have about, last time I checked, they had about $26 billion left in the US Treasury. The reason why they cannot pay their bills is because there's $21 trillion missing from the federal government. The government has been stealing the money. Okay, in terms of these banks, what they're doing with the Ukrainian war, and this the current administration sending all this money over to Ukraine to fund this war with Russia. They're in a proxy war with Russia. They're money laundering, guys. They're laundering the money, and the money is being sent back here. Right now, allegedly, let's just say allegedly, that BlackRock is one of the beneficiaries of this money laundering, that there's an operation going on, allegedly. I'm going to say allegedly because I don't know what I can and cannot say here, and I don't want to get in trouble, but allegedly that's what they're doing. And so the government right now can't pay back its debts because, one, we have a unnecessary war. And again, I digress from equities, but we'll get back into equities. But we have an unnecessary war. Also, too, the government has trillions of dollars of unfunded liabilities in terms of Social Security, the welfare state, government pensions, military pensions, et cetera. So the government just can't balance its books right now. But I digress. So yeah, on the weekly here, we're having a little bit of, well, it hasn't come out the cloud yet, but as we get into the daily, get into the lower time frame. Yeah, here on the daily, it's pretty thick Kumu cloud. However, Cinco Span or Chico Span is still touching on the daily. So we're still, as we go in the lower time frames, we're still seeing consolidation. And consolidation means get out. Don't do it. Here, yeah, this market is it's just not stable. It's not stable. The market is consolidating. I would be very cautious here. I would be very, very cautious here. We're going to get into NVIDIA stock as well. Here on the hour, which is where I'll kind of end it off here. Ichimoku is saying that it is stuck in the clouds. So buyers beware. Buyers beware. Beware. We had a pop in NVIDIA. Look at this pop. Guys, this was crazy today. Oh, wow, guys, this was crazy. Look at this pop today. This was what's today? 25th. Again, it's your boy Jay. This is Digital Revolution Podcast. Please like and subscribe if you like the information that I'm going over. I haven't been on here in a while. I've been going through my own issues. I've had to take a rest. Health issues in terms of allergies being off the chain. Guys, if your allergies is being fucked up right now, like and subscribe, and leave a comment. Like if also you're having allergy issues as well. But anyway, so yes, so let's measure this here. So I don't know why something is going on with NVIDIA, where the stock went up almost 30% today at the close of the market. Guys, however, what Ichimoku is telling us with this NVIDIA stock, and again, this is not financial advice, do not take this advice, but what Ichimoku is saying, read the indicators, is that this is an unstable uptrend, that this is possibly market manipulation at its finest. Now, as we go into the lower time frames and the 4-hour chart, and guys, I hope you can see this chart that I have here. As we go, so this was the pop today. This was a pop. I mean, that was 30% increase in the stock. However, what we see here is an unstable uptrend. Ichimoku is telling us this is unstable because the cloud is not thick. And as we go into the lower time frames to see if we're getting a trend on all the time frames, because we want a trend on all the time, we want a major trend on all the time frames, we're seeing that what the trend is that this is unstable. So again, buyers beware. There's a lot of volatility out there. And as you know, there's only a few stocks that really prop up the stock market on the S&P 500. And here, if we look at the heat map, so one of them is going to be, so just a handful of stocks prop up the stock market. So we have Microsoft, we have Google, we have Meta, and here we have NVIDIA Corporation, and a couple of other tech stocks that solely prop up the S&P 500. Again, with the S&P 500, we have consolidation mode. It could very well go to its all-time highs. It could very well go, but it's just all smoke and mirrors. Guys, the long-term trend and what I myself believe, what the banks and what the hedge funds and what retail investors are doing or what traders are doing, yes, the traders, they have to know that the money is not real. They have to know that that the money is third-party liability. It's counterparty liability. It's the liability. The money that we have in circulation, let's just say that this is money, is the liability of the federal government, right? And if the government defaults, therefore the debt defaults. So long-term trend is de-dollarizing, it's getting out of dollars. I believe the banks, the traders know that. So what they're going to do is they're going to try to increase their gains as much as they can for the short term. It could be anywhere. Egon von Gler says it's anywhere from a year to 2 years. And before we close this out, we're going to get into some quotes on Bill Holter. Guys, I hope you follow me what I'm saying here. This is not easy to express some of these things. Again, I'm a licensed realtor and a licensed esthetician, which means I help people with their housing and their homes, and I help people with their skin if they have skin issues. This is not financial advice, but I am an investor. And you don't have to necessarily invest in stocks and bonds and equities and treasuries to be an investor. Anything that you invest your time into, you're an investor, right? Okay, but again, like I said, everything here in the stock market that you see is based on dollars or is based off of a derivative. It's all smoke and mirrors. This whole economy is a Ponzi scheme. All the dollars that's out there that's propping up the market is debt based, and the long-term trend is to de-dollarize. So potentially we're going to see a lot of volatility in the market, because as the market prices that in, as more and more people wake up to that, we're going to see equities collapse, because people are going to be drawing liquidity out of the system, and they're going to be rotating that into one of the long-term assets that's going to hold its value long term, which is going to be precious metals. And I wanted to say that you may even see a bifurcation in the markets here. Here, let's see. So, and if you go back to what I was saying before, it's happening that the price of gold was gonna go down. Guys, we may see gold go to $1,600 an ounce. Don't quote me on that, but as the equity markets fall, so will these paper prices of gold. These are paper prices. However, we're still going to see premiums. Guys, again, if I convey anything to you guys, that the overall trend, and I hope you guys can hear me, the overall trend of these markets is to get as much money as you can, make as much money off of equities, off of treasuries, and off of CDs as you can. But in the short term, remember, we had an inverted yield curve, which means that money long term, they don't believe in the money long term, that they would rather hold their money short term. The Fed raised the interest rates, so the principal on those bonds go down. Okay, I don't want to get into the whole mechanics of the financial system, but what everybody needs to know is that the dollar is fucking bullshit. It's fucking bullshit. And eventually the dollars long term will go away. Will it happen tomorrow? Maybe. Will it happen a year from now? Possibly. Will it happen 10 years from now? Probably most likely that the money that we know itself will go away. And so the long-term trend is to make as much paper as you can and convert it into something hard as you can. So to raise as much capital as you can, pay down debt and buy something, a hard asset, because as we go to the reset, then we will figure out how we will reprice those hard assets. But the ones that hold the hard assets, and a hard asset could be anything. It could be, well, a phone is a depreciating asset, but anything that's going to hold its value. And again, it's your boy Jay. This is Digital Revolution Podcast. And I'm trying to convey to you guys that the long-term trend is that these equity markets are going to go down. We're going to see possibly the Dow Jones go to $4,000. We could possibly see gold prices go to $16,000. However, what they're doing with the hedge funds and what the banks are doing is they're suppressing the precious metals markets. They're raising capital as they're suppressing the price of gold and silver. They're secretly buying it up. They're secretly buying it up, but they're suppressing it. They're secretly raising their paper money, and then they're turning that paper money into precious metals because there's going to be issues. There's going to be extreme volatility, I believe, long term with the dollars. And again, I'm not in any of this. When Charles Naylor told his subscribers to get out of the market, we got out of the market. Now, that doesn't mean that you cannot make money and people are not making money. Oh, as a matter of fact, let's just say making paper money, because money, let's just go back to this. Money, the real definition of money, constitutional money, is gold and silver. The only real money, guys, is gold and silver. Everything else is credit and debt. And everything here that you see in the stock market is just funny money. Now, you may have made an increase, you may have made $1 million, but as Lynette Zhang says, a 0 times $1 million is 0. Eventually, if you don't convert that paper asset in that time frame, before nobody wants the dollar, before the dollars are hyperinflated away, then you'll be caught holding the bag. So you do not want that money, right? You do not want that. You want to convert this worthless pieces of paper. Let's just say, again, this is just an example of like, if this was real money, because this is exactly what money is. It's an IOU, IOUU. It's an IOUU, right? And again, I don't want to go too deep into the plumbings of it, but because it's very complicated and how money is created and whatnot. What people need to know is that this is all smoke and mirrors. Now, probably in the 90s, when money was harder, when the dollar was harder and the dollar wasn't depreciating by the day, by the minute, by the month, yeah, you could be in dollars, but the trend, I believe, moving forward is going to be to de-dollarize. What those countries are doing in China and Russia and all the BRICS plus nation by getting out of the dollars, we as United States citizens are going to be doing that as well. And maybe we don't see it now, but as equities come down, once we hit a hard, and I want to say this too, guys. Let me slow down here. I want to say this too. that we could very well see the stock market go up to all-time highs. You know, okay, so here we have again on the gold chart, gold went down here. It went down 6% from its all-time high. We had an all-time high here, and it went down 6%, exactly what I said it would. If you go back on the last videos, I said gold will go down, and I believe that gold could go down to 16,000 once we have a massive sell-off of equities. However, we're on a time constraint. The time constraint is you have about a year to 2 years to raise as much as this, pay as much debt down as you can, and buy hard assets so that when we go into the reset, then you will have the hard assets. I'm hoping this message is coming across clear. I know that I started the podcast in the last Mercury retrograde and everything was kind of really hard to explain or whatever, but I'm hoping I'm getting this across to people that this is the game. This is what the banks are doing. Raise as much money as you can in the short term, and then convert that money into hard assets. And again, I believe that we're going to see probably the price of gold go down to almost $16,000 an ounce. And if it does, guys, that is going to be a buying opportunity. You're going to want to buy because you're never going to see after that $16,000 mark. It's just going to go sky high. It's gonna hold above that 2,080 mark there. It's going to hold above there. It's going to go down with equities. Yes, it's about $16,000, but then once it goes up, that's it. And possibly that in that short time frame, I'm going to give it a year to 2 years where you're going to see all the banks and individuals and retailers and private and sovereign governments, particularly hedge fund and banks, try to raise as much capitals as they can and consolidate as much as they can and buy up all the gold and silver. Again, it's your boy Jay. This is Digital Revolution Podcast. I hope I'm getting this message across here. And I think that we could possibly see, let me pull back a little bit on this again. I hope you guys are following this. Let's pull back on a weekly chart and let's get rid of this here. We could very well see the S&P 500 reach all-time highs. They're going to prop this market up. Look, I'm going to be looking for them to prop the market up to come to all-time highs, to possibly even go back to these all-time highs here. But once they do, and once the market crashes, that's it. It's going to be a free fall and the market is going to collapse. So they're going to give people a false sense of security, because when people look into their 401k statements, when they look into their pension funds, they're going to think, okay, well, you know, the market is still up, even if it's in consolidation mode, but look at the market is going up, and then boom, the market is going to go down, and then all hell may break loose. Okay, again, it's your boy Jay. This is Digital Revolution Podcast. I hope you guys are following me. Let's wrap this up with Bill Holter. Let's see if I can get a little Bill Holter on here. Hope you guys can see this. And again, this is your boy Jay. This is Digital Revolution Podcast, and we're going to just tune into USA Watchdog to hear what Bill Holter has to say and bow to Bill Holter. We bow down to Bill Holter. He is the man.
Even if they reach a debt deal, you still have this huge banking calamity that's on its way that they're soft pedaling. And to come on and talk about it all is Bill Holter. Bill Holter of BillHolter.com. You also are a gold and precious metals, silver, gold, precious metals broker at Miles Franklin, some of the biggest guys in the industry. Bill, thanks for joining us today on USAWatchdog.com.
Sorry, guys. I love you.
Thanks for having me, Greg.
Well, let's talk about the about Jamie Dimon. I couldn't believe this. I'm watching.
Jamie Dimon is fucking. He just made $36 million. $36 million. He's the fucking richest CEO. He's the highest paid banker in the world. This motherfucker knows everything. Jamie Dimon. He knows where all the dead bodies are.
Reporting on this, and nobody's reporting it. And he says he thinks the Fed funds rate is going to be 6 or 7%. And Janet Yellen is saying, well, more consolidation in the banking industry may be necessary. Excuse me? Maybe necessary. Wait, people going out of business may be necessary? Anyway, let's start with Jamie Dimon. What's up with him saying he wants a Fed funds rate at 6 or 7%? He's been saying this, incidentally, since January, and that got completely soft-pedaled. The Fed funds rate, we're at almost 5% now, around 5%. He went 6 or 7%. Holy cow. What's going on with Jamie Dimon?
I think, first off, I think that's the plan, is to collapse things. And I think he's talking his book because raising rates so far has already put a huge dent in the equity, if you will, in the banking system. Higher rates from here is going to tank more banks. And what banks are going to end up buying the profitable assets? JP Morgan and banks like that. So it's not a surprise that Jamie Dimon would be even rooting for higher rates, because that would mean JP Morgan can get bigger with the good assets of failed banks.
Right, because essentially they're creating a digital concentration camp. Eventually, they will be able to consolidate everybody's banking account into just a few major banks and get rid of a lot of the regional banks that's holding a lot of the commercial real estate toxic debt. Real estate is going to be toxic. It's going to be toxic, particularly commercial real estate, and that's going to eventually spill over into the residential real estate. But essentially, they're going to push everyone's account will be in just a few banks. Really, they want to be able to get everyone's account on one ledger, and that would be the CBDC, guys. Although we talked about the CBDC, but that's for another time. But if you got food stamps, if you got fucking unemployment, you basically already got EBT. I mean, you already got CBDC if you already got that. But again, we'll let Bill Holter talk.
Said he didn't get all their business. He just got the profitable parts of the business, which is a gift. I think they got $92 billion in deposits. And you know, we had this report, and I know you know about this, that the Fed came out, and Kansas City Fed made a presentation. I had this on my wrap up a few weeks ago. And they said 722, specifically 722 banks, not big, small, medium, large, whatever, but 722 banks lost more than half their capital in the third quarter of 2022. Damn. They knew all this was going to happen. Signature Bank, Silicon Valley Bank, First Republic, and who knows how many other banks are going to go under, because Yellen's signaling that
it's all a scam. It's all a scam, guys. They want to collapse the United States. They're going to collapse. Eventually, they will collapse equities. They're going to collapse everything, the pensions, the 401ks. But I digress.
All knew this was going to happen. Do you think that's the plan, that they're going to take it?
Yeah, exactly. And ask yourself, Greg, what happens when the banks collectively are losing equity or in tough shape? What do? They pull back on their loans. And I've talked about this for years. Once credit seizes up, everything ceases. So if you look at this as if you see the whole system as a Ponzi scheme, which it truly is, how do you stop a Ponzi scheme?
It's all a Ponzi.
A Ponzi scheme has to be continually fed with new capital at exponentially higher rates. Now, if you shut bank lending down, what does that do? That starves the Ponzi scheme. And I think that's what they're doing, is it's a plan to starve the Ponzi scheme. And when all is said and done, what they'll say is, who could possibly have seen this coming?
Dimon was talking about, he's basically the de facto big bank spokesperson, really. I mean, I'm not listening to the Fed. I'm listening to the owners of the Fed. Dimon's an owner, okay? So he was talking about that we've never seen QE, you know, we've never seen QT, quantitative tightening, raising rates, pulling back money. It looks like the rug's getting jerked out pretty significantly, right? You think that your prediction of that this is going to go faster and faster until zoop, it goes, you know, straight up in the air, that we're going to have a credit crisis? Is that what they're going for?
Well, I've thought all along, and I've said, you know, my belief all along is that this will end up in a credit crisis, credit crunch, and ultimately a complete seizure of the credit markets. And
right, because there's $320 trillion of global debt, and then there's 2 quadrillion of derivative debt that's off the books of the banks. And eventually something's going to give. I mean, the banks they're already starting to fail. All the banks is really one bank. And I've been saying this for years now. Now I didn't quite really understand it, but I knew instinctively that all the banks was one banks. But now it really is, the banks are showing their hand, because once one starts to fail, they all start to fail. And essentially the banks are being nationalized, as Bill Holter is saying. It's okay for those multimillionaires to fail and get basically a form of socialism, get paid for it. But it's not okay for the average person to fail. But again, we digress.
We've talked about it many, many times. Once credit ceases, everything stops. The real economy stops. The financial economy, the financial markets basically implode, because
that's basically like doomsday. That's doomsday. Again, the debt is outstanding, and then they cannot pay back the debt. The debt starts collapsing. Therefore, the banks cannot extend credit because they are over leveraged, and they just cannot extend credit. And everything is involved in credit, as we learned through Bill Holter. How do the cops get paid? How do they pay Social Security? How do they pay welfare on to some level long term? This is why a lot of the banks are buying gold and silver, because the dollar long term is garbage.
Thing is held up by credit. I mean, think about this, Greg. We already know that you've got massive commercial real estate in all these big, especially the blue cities, that are empty. And on top of that, now credit's becoming unavailable or extremely costly. So
guys, all of this is pointing to doomsday. And I don't want to scare anybody, but I believe that some, again, like some of the topics that we deal with on this channel are fucking deep as fuck, but this is all pointing to population reduction. As the debt collapses and governments are no longer able to service the Social Security and the pensions, meaning that people will not be able to get their Medicaid, people won't be able to get their unemployment benefits. You're going to really see how people really are. I mean, what is it? After a few days, they don't eat, they're going to eat you, So it's very, I don't think they talk too much about how all of these financials and all this paper money, all this fake paper money, the consequences of it collapsing is that we get into something like complete collapse of society.
Going to definitely see a commercial real estate collapse. And I've had, just in the last couple of weeks, I've had several people tell me, well, I'm going to buy I'm going to buy land with my money, because land is a tangible asset. And my caution to them is, you need to understand why real estate prices exploded and got to the levels that they are. They're unjustified levels, but they got there because there was money available for buyers to buy with.
Credit.
And that money available was credit. Once credit ceases, who's going to buy the properties?
True. Well, different analysts say different things. I totally understand and agree with what he's saying. Like, the whole real estate market is based off of debt. We learn as realtors that 40% of people default on their mortgages as the crisis continues. Conservative number would be 60% of people, but I think actually it'd be like 70%, if not everybody, starts defaulting on their mortgages. And well, let's continue on.
Better have cash, and then you better be able to get at your cash.
Oh, but yeah. So Bill Holter is saying his outlook on real estate is very negative, and I tend to agree with him. If you didn't sell your house at the peak in January 22nd of this year, if you didn't sell your house then, and you try to sell it now, who's going to buy it? No one's going to have money to buy it. Banks won't be able to extend credit unless they have cash, but there'll be fewer people with cash because they'll be trying to convert their cash into something harder or something that's a little bit more liquid. Because remember, real estate is illiquid. It's hard to sell it. However, you get people like Martin Armstrong that has a little bit of a different view. Once we go into the reset, you may be able to collateralize that actual real asset into something. You may be able to exchange a home for another home or exchange it for something. So different analysts say different things, but essentially it's not looking good for the housing market.
Right. I mean, I did have a short call with John Williams before he got on, and he says, Nobody's buying bonds. Everybody is hoarding cash.
Mhm.
I thought, wow, that's
Right.
interesting. He goes, yeah, the Fed's lying. He said, they're lying. Nobody is going to buy this. The rates are going to go up. That's what Jamie Dimon is saying. Who would buy 4.5% Treasury or 4%? I think it's just the 10 years almost at 4%. If you thought Treasury would go to 6%, who's going to buy? They're going to hoard
Get
cash.
rid of
Isn't that
inflation.
what we're looking at? A cash hoarding environment, what little cash there is.
Yes, as I was saying. Because what they're doing, they're trying to, with the stock market, they're trying to raise as much capital, trying to take as much liquidity out of the system as they can and convert it into hard assets. They're going to hold cash and hold the hard assets. In Bill Holter's instance, he's very bearish on real estate, but then you get somebody like Martin Armstrong, who's a forecaster, saying that once the dollar collapses, we're going to need something to reevaluate. We're going to need some kind of a hard asset to collateralize the new form of money.
Well, and the other thing is,
Explain that.
if you're looking at 3 3/4 or 4% on a 10-year treasury, what's inflation running at?
Exactly.
Oh, wait,
7%.
So therefore, those bonds, those treasuries, even though you're getting a 4 or 5% interest rate on those bonds and treasuries, but the rate of inflation is really at like 10, maybe 15%. Let's just give a conservative view of 10%. If those bonds are not maxing out the interest rate at 10%, then actually you're losing money on the bond. The bond and the yields on the U.S. Treasuries have to be above the rate of inflation for it not to be in the negative.
Percent.
the official, that's
What's
the
the
official.
real number? It's probably
15,
15
10,
to 20%, the
15,
real
20%,
inflation rate.
real inflation.
So, you'd have to be really diluted in order to lock your money up at 3 or 4% if you know that the inflation rate is.
And again, guys, if we can walk away with one thing in terms of where you're investing your money, and again, this is not financial advice at all, but it's what do you believe in the dollar long term? If you believe in the dollar long term, then you keep your money into stocks and bonds and equity and U.S. Treasury. But if you have no faith in the dollar, you're taking your money out and you're converting it into hard assets. It's as simple as that.
Much, much higher.
Wow. What you're at Miles Franklin. I mean, I generally don't Miles Franklin stuff, but you are in a different situation. You got people that aren't going to buy bonds, like you just said. They're not going to buy bonds.
Right.
Gold has backed off some. It's still 19 something, 70 something and changed, so it didn't back off that much. Are you having people calling you now if the prices come down below 2,000? Are they afraid of buying gold, or are more people going, wow, it's on sale, I want to buy some gold?
I'm going to say just in the last couple of weeks, the business has slowed down a little bit, but pretty much for the last 6 or 8 months, and especially since the banking crisis back in March, we had people call us and want the trade done the same day, and they want to wire the money the same day. People are truly stampeding, trying to get out of the system. They want their capital out of the banking system because they don't know, what day it's going to be that they wake up and find out, the banking system is seized up.
That's what it is,
and
guys.
when that happens, how do you get your hands?
That's exactly what the trade is. I believe this is what the trade is. And you're going to find different analysts basically saying the same exact thing. And they're going to tell you to diversify because nobody really knows. But ultimately, it comes down to what do you believe in the dollar? Do you believe in the dollar strength? And even if you are investing into all those ETFs and those equities, you're kind of funding the people that are robbing the money from you, essentially.
You get to use your money. You don't. You're going to be dictated to, whereas if you own gold or silver, you have that capital out of the system. And I do want to mention with both gold and silver, they are the only 2 monies on the planet that cannot bankrupt.
Default.
So if you're looking at inflation, let's look at the possible scenarios. If you're looking at inflation, that means the currencies buy less and less over time. And historically, gold and silver have done fairly well during inflation.
So eventually, when this is all said and done, when people start to wake up and they see their 401ks is cut by 50%, and possibly they'll just lose all their 401ks, when they see that the government can no longer fund them, the unfunded liabilities. And when all those countries start to de-dollarize or in the process of de-dollarizing and all the dollars come back and we have hyperinflation, people are going to be running to get out of the dollars essentially. So I agree with the whole thing.
Disinflation, a disinflationary period is basically where the powers that be really have control over the system, and the interest in gold and silver do wane. But if you go into outright deflation, which I firmly believe you're going to see that, you're going to see asset prices collapse because the monies worldwide, the fiat monies worldwide, are created by they're created by credit creation.
Exactly.
So if you have a deflationary event, these currencies
credit
that are credit based, the currencies themselves are going to collapse, and that's when you see gold and silver shine. Whenever,
and this is so important, and I have to just really give kudos to Bill Holter for being able to explain this complicated ideology of the difference between fiat money and real money, and why the system is collapsing and what to do with your money essentially. And I'm not telling anybody to do anything with their money, but this is exactly what people are doing. Is this all comes down to your belief, your faith, and your belief in the dollar and your understanding of what the dollar is.
Thing is defaulting. You have massive capital trying to find the one place where they can't wake up tomorrow morning and find out they lost everything.
Right.
And that's gold and silver, because they cannot default.
Exactly. And that's why you're going to see, all these traders and hedge funds trying to raise as much capital and prop up the market, but they know that the money is it's not real. They're going to try to make as much, trying to gain as much liquidity in the system as they can, try to extract as much liquidity and roll that over into gold and silver. Now, guys, if you want to check out the full interview, go to usawatchdog.com. Guys, I'm going to wrap this up. Hopefully this wasn't too long. Hopefully I was able to explain some things. I haven't been doing these podcasts as much because I've been having my own things I have to go through in terms of, having to work and rest and just allergies bothering me, but I will try. I'm going to leave it on this. Let me stop sharing this. Let me just leave it on this, guys. I think the next step is that we could see a complete collapse in society. Once the government, they're not going to officially default on the debt. The reason why they're defaulting is because they stole money and they continue to steal money from the budget. And it's people out there that don't have any good intentions for the United States, and they want to see the United States crumble. It's the last bastion of freedom, and they're trying to take all of our freedoms away and eventually usurp the United States Constitution. And there's people that want to see the U.S. go down. And so, guys, we could go into a period where, once the government starts to default, that they could be a blackout, could be an EMP strike, something. I think people feel it, that something is going to happen. And I'm not quoting this, but guys, you have to be prepared for anything. I myself believe that at some point they're going to take the lights out, and then they're going to be able to roll in their CBDC. Again, anybody that's on unemployment, anybody that's on welfare, they already have CBDC, but the CBDC really is about putting everybody on one ledger, on one balance sheet of a few banks. Again, it's your boy Jay. This is Digital Revolution Podcast. I hope you like some of the information that I'm kicking to you. Please like and subscribe, and I'll see you on the other side, guys. Stay blessed.